Hi, I'm Jaume Gomes, also known as DJ, and in this video I'm going to explain about Oracle EBS Rollouts to Brazil. I'm going to talk about third-party software house and why their solution is mandatory to integrate with Oracle in Brazil, and share nuances and info that you cannot miss. If you have any question at the end of the video, just contact me and I'm glad to help. I hope you enjoy it. Thank you.
Rollout means that the client already uses Oracle EBS and intends to roll the same solution to other companies or countries in order to gain scale. But rollouts are indeed implementations, and there are almost no difference in the project lifecycle. That's why Oracle used either AIM or ABF methods in the old days for both types of projects. But rollouts are far more complex from the managerial perspective. Let's see some challenges that Rollout has over singular implementations. First is unclear local business and tax requirements. If a rollout is done to other countries, chances are that headquarters don't have a clue on how they operate their business down there in details. Take Brazil instance. We have tons of legal tax rules and laws that can drive anyone crazy. An attempt to ignore and disregard that situation will turn into failure and decrease local users' commitment towards the new system. Second challenge is related to local buy-in from local users. Bear in mind that local users are never happy to lay off the current system to implement Oracle EBS. They will lose autonomy in defining processes and policies for their current system, and they now will depend on corporate IT for enhancement requests. They need suddenly to learn how to operate a new system, thus removing them from their comfort zone. That's why an attempt to force downwards any corporate definition without listening to what they have to say will decrease their buy-in towards the system. Third challenge is related to high dependency on corporate IT. During a rollout project, the module owners within corporate IT wants to know every single detail, and they are right about that because they will inherit in order to maintain the system after the project. However, if they are used to have documentations and methods such as AIM or OUM, and depending on how the method and the governance were defined and established, you may have so much bureaucracy that your project will not flow smoothly as expected. The result is that your team may neglect important things such as testing and user training in order to prioritize bureaucracy and please your corporate IT or corporate PMO. Defining a lean and yet effective and controlled method is key to accomplish success, not only during your project, but especially after go live when you have to acquire ownership over the system. Fourth challenge is related to communication. This is a common issue in global rollouts that you should expect. People from different cultures and generations tend to react and communicate differently. First of all, we have obvious language issues, which is a visible thing. But the real problem is related to cultural gaps. Brazilian people, for instance, don't report issues as clear as North Americans expect them to do. Most of the time, they refer to issues as risks, thus giving the impression it's still manageable. Global project manager needs to appreciate different cultures in order to filter the message to its real meaning. I have managed quite a few global projects and I have faced the most odd situations. Take this my one advice. Beware of language barriers in global projects. Fifth challenge is related to matrix report in a complex organization. According to PMBOK, the number of communication channels grows exponentially according to the number of people involved. In global projects, we usually have not only the project team and the steering committee, but all the governance people, such as IT quality team, which is worried about the CMMI, PMO team, global Oracle team, infrastructure team, and so forth. The amount of different methods, processes, and policies could seriously slow down the project, and I have some interesting cases I faced about this. Sixth and last challenge is related to regression tests, which is indeed the only one related to the project lifecycle. The most common approach in global projects is to have a single instance, which means that different countries will operate under the same environment. From one side, it will help in a sense that you don't need to repeat basic setups, installations, and patches, and therefore you may save some time when maintaining your system. But from other standpoint, you will need regression tests for every patch you apply in the single instance to ensure that no other country was negatively impacted by those patches. Since Brazilian rollouts have tons of patches, Oracle modules, and several integrations with third-party systems, you will be looking at a complex testing process. We also have 5 important points that you must consider for Brazilian rollouts. I call them Brazilian nuances. First one is related to GL primary calendar. Brazilian legislation requires using BR-GAAP, and therefore we require Brazilian calendar, which is quite different from US calendar. Our month starts at the day 1 and finishes at the last day of the month. We cannot use 445 calendar as the primary set of books because this will cause several tax and accounting issues. You will miscalculate taxes and your legal reports will come out incorrectly, thus exposing your company to serious fines. The advice I give you is to follow Brazilian legislation and use your 445 calendar in your consolidated set of books. You might need customizations to have both hard closing for government and soft closing for corporate reporting. But you'll be looking for more customization if trying to use 445 calendar for your primary set of books. Some legal reports also require both analytical and synthetic accounts in your chart of accounts. Remember to ask your tax manager and the controller in the Brazilian operation, and they shall tell you everything you need. Second nuance has to do with order management and accounts receivable module. Both modules in Brazil requires much more transaction types than you might expect. So don't be surprised if your local project team tells you they need to set more than 200 or 300 transaction types. This happens due to the tax legislation in Brazil. We require different transaction types in order management, even if we're only transferring inventory items from one warehouse to another warehouse. I will explain this more detailed in a minute. Third nuance has to do with integrated receiving module, which is a module developed by Oracle Brazil almost 2 decades ago for Alcoa, and it became a product sold by Oracle Brazil. Its purpose is to function as a liaison among PO, AP, inventory, and third-party tax solution modules. It's a mandatory component for Brazilian rollouts. I will soon explain how it works. Fourth nuance has to do with cost management. CST is the core cost management module for Oracle, and some years ago it had only 2 custom methods, standard and average. In order to meet Brazilian legislation, Oracle Brazil developed another module with a distinct custom method used in Brazil and accepted by Brazilian legislation called periodic average costing. About 10 years ago, this custom method was incorporated into core CST modules. But even though periodic average costing is just a custom method within the core CST module, most Brazilian companies still consider it as a different module. And fifth and last nuance has to do with bank transfer. The most popular payables and receivables methods in Brazil are bank transfer, also known as EFT, electronic fund transfer. Using checks for payment is not so common among companies. Even though EFT is part of both AP and AR modules, the objects related to EFT might be sold separately by Oracle Brazil. Note that each bank has its own EDI standard. Now, we will see the main partner software house considered in Brazilian rollouts of Oracle EBS. Those partner software houses are required because Oracle EBS does not provide all features and functionalities for rollouts to Brazil. I categorize them into three types of needs, which are: first, tax solution. This is a must-have group. You cannot implement Oracle EBS without purchasing a tax solution. An attempt to do it will imply not only millions of dollars spent in customizations, but especially in millions of dollars spent in system maintenance to keep the system updated according to the legislation changes. And legislation changes a lot in Brazil. The two main players in Brazil that provide tax solutions are Syncro and MasterSaf, but MasterSaf has recently been acquired by Thomson Reuters. Even though both systems are similar and equivalent, your consulting company may suggest one or another due to partnership reasons. I will explain the tax solution in Brazil and how it works with Oracle EBS in the next slides. Second group is foreign trade management, which is a should-have group for companies who have both importation or exportation, because Brazil has taxes, fees, and process related to foreign trade that Oracle does not address. But you can still survive without it, depending on your volume and with a few customizations and manual controls. The two main software houses are NSI and Software, which this last one was also recently acquired by Thomson Reuters. And again, both systems are similar and equivalent, but your consulting company may suggest one or another solution due to partnership. And last group is related to cash management and treasury. This is a nice to have group. Oracle Cash Management, as everyone is aware of, does not allow a daily cash flow management. You will surely manage your business without a good cash management system, but you can do much better with one. Gesplan and Sage are the two Oracle partners most used down here. All Oracle partners use ODI and BPEL for integrations as recommended by Oracle, but due to the high cost of such middleware, most of them also implement their solution using DB links. You may lose some features and security that ODI and BPEL provide, but it's still an available solution. Now, let's have a glimpse of tax solution in Brazil. Brazil has federal, state, and city taxes, but city tax basically covers only service. The main and most complex tax and legal reports are state and federal ones. Federal tax legislation has more than 150,000 different tax rules and 30,000 tax laws that are applied depending on your industry segments and on your ongoing business. State tax legislation has around 1 million tax rules and more than 75,000 tax laws distributed in the 26 states and the Federal District Brasilia. They all depend on your industry segment and business context. We have around 50 new tax legislation changes every working day, which gives us a ratio of one new tax legislation change every half hour. An average company in Brazil must follow around 3,000 different rules and deliver dozens of legal reports that may change throughout the year. As you can see, it's not complex only to implement, but also very dynamic to maintain as well. As I have mentioned, state and federal tax rule primarily over goods or income taxes, while city tax rule over service. Some popular federal taxes are income taxes, IPI, PIS, and COFINS. State tax rule over goods and does not relate only to goods sold, but also goods transferred from one warehouse to another warehouse. They also require electronic reports that allows our government to cross information to figure out whether you are paying the tax you are supposed to pay. Taxes in Brazil depend on what I am transferring, selling, or buying, which means that all three operations may require tax calculations. They also depend on the purpose of the transaction. So, if you sell an item to be used in a manufacturing process, it may have a different transaction type than if you're selling to a reseller or if it's only a gift, you're giving it away. Transferring goods from one warehouse to another warehouse may also contain distinct tax rules. Selling or buying from a company within the same state where physically located is also totally different than selling or buying from another state. Each of those transactions may require different transaction type in order management module. Another entity you must be aware of is electronic invoice, also known as nota fiscal in Brazilian Portuguese. Literal translation would be fiscal note or fiscal invoice. In the old days, it used to be a paper that needed to be issued, but now it's done electronically, with a few exceptions for some cities which do not have electronic invoice yet. This electronic invoice is required for every sale, purchase, or even inventory transfer between two different warehouses located physically in different places. Receiving or paying money with no fiscal note to back up the transaction is considered illegal in Brazil. Since Brazilian rollouts require not only EBS, but a tax solution purchased from a third-party software house, both systems need to be planned together. Assigning consultants for tax solution prior from some Oracle requirements or math is useless and will imply lack of efficiency. Most Oracle project managers don't have a clue on what those requirements are. The table I am presenting in this slide is just a help with the main business requirements within Oracle that must be set prior to test the tax solution system. Most of the data are interfaced from Oracle to tax solution, regardless it's a master staff, which belongs to Thomson Reuters now, or if it's related with synchron integration. That's why you need to have those informations in order to validate the integrated solution. I will go not through every single tax and Oracle requirements, but you may stop the video in order to write down the suggestion that is presented in this slide. We will now see how an integrated solution for Oracle EBS works along with third-party software houses in Brazil. In the procure-to-pay cycle, it all starts with a purchase order, regardless it's a regular PO or a blanket. Your vendor needs to send a nota fiscal, which is the electronic invoice, along with the goods in the shipments, which will be entered in integrated receiving module. Integrated receiving matches the invoice with the PO to figure out any discrepancies, and if everything is okay, the info is sent to Inv for inventory balance update, to accounts payable, to GL, and to tax books, which belongs to the tax solution sold by a third-party software house. The dot line between integrated receiving and inventory is because we need a PO in order to update inventory. If there is no PO associated with the invoice, inventory balance will not be updated. Now, let's check the order-to-cash cycle, where everything starts with a sale order that updates inventory through ship confirm and pick release process. After that, the transaction goes to accounts receivable through our invoice core process, where the invoice is generated. Billing is a feature within AR module, but due to the tax engine and the setups required, it's a very time-consuming part of AR implementation. Therefore, it's usually estimated as a different module by consulting companies down here. Billing sends the invoice to a tax solution module called electronic invoice or Nota Fiscal Eletrônica in Portuguese, which sends to the Brazilian government to be validated. After the validation returns, this electronic invoice module returns the Nota Fiscal back to Oracle with the validation number. This process also registers the record in the tax solution system. We call it fiscal books. The receivings for such invoice then done in accounts receivable module using electronic fund transfer with banks. As I said, AR and billing are the same module that are considered different modules for estimating purpose. If you decide to implement foreign trade management solution, both order to cash and procure to pay cycles will have integration with such system in both sales/nota fiscal issue and purchasing/nota fiscal receiving. Every transaction goes to GL for accounting as expected. Periodic average costing is updated upon goods purchase, inventory transfer between organizations that belong to different costing groups, and work in process resources. The cost, however, is only updated once a month after executing several concurrent processes. Tax solution has also several legal reports that the government requires. The info comes from tax books, HR and payroll, GL, and several Oracle subledgers. We are now reaching the end of our presentation, and I will give you an overview on how consulting companies operate down here in Brazil. All of them work with subcontractors as consultants, which we call PJ in Portuguese, instead of employees, which we call CLT. They do that to increase their margin due to high costs in hiring employees in Brazil, and also due to the demand fluctuation in projects. That's why it's rare to receive a resume of a given company which is an employee, and it's pretty common to receive a resume of a given consultant from different consulting firms which are competing for the deal. Consulting companies may strive to keep the same consultant if one project starts right after the previous one ends, but they will not definitely keep him on the shelf. For some clients who demand the consultants to be CLT, which means an employee, consultancy firms may adopt a flexible CLT, with something even worse for consultants than a singular PJ. It works like this: you legally register the employee under a certain low salary, pay the rest as expenses, and for that, the employee must present invoice to be reimbursed. Consultants hate this, and they will not be pleased to work under a flexible CLT contract. About methodology, most consulting companies do not have a risk management process in place to audit their projects along their execution. They count on the project manager they hire to lead the project correctly. They don't usually care with what methodology project management will use, neither will bother giving him training. Most PM use traditional AIM, and only a few of them are aware of some naming conventions that OUM brings in the new methodology. Change management techniques to acquire users' buy-in and decrease conflicts is not a common ground. Most clients will either go for the Big Five or hire the same consultancy companies they are used to. Since they are unaware of how consulting business functions down here and what are the good consulting companies' alternatives to hire in order to execute the project, if you are a multinational who intends to roll your Oracle EBS to Brazil, this is how I can help you. I may provide guidance and mentoring to structure a EBS rollout to Brazil, evaluating your project context and objectives, to suggest the best change management techniques and customize the Lean Apps method templates to meet your personal needs. Although the strategy and templates behind Lean Apps method are well formatted, Some changes to reflect your context are always recommended. Remember that one size never fits all. I can also provide you support to source Brazilian consulting companies to execute a project. Since I've been working in Oracle consulting business in Brazil for the past 17 years, I pretty much know the market and will be able to point out the good options for you to decide. This will bring reliable companies that you don't know in your short list and will give you punch during the business negotiation. I can also support for contract evaluation. There are some gaps and issues that may be anticipated during the contract negotiation that I can help you to evaluate. I have done this a lot in my career for other consulting companies. With such service, I can help you to avoid mouse traps that could end up in future and unexpected change requests. And finally, I can either assign a senior project manager that knows rollouts in Lean Apps method, or even I can manage your rollout to Brazil myself. If you already have a project manager in place, I may provide him health checks throughout the project. We finally finished our presentation. If it was of any value to you at all, please help me by joining our page at Facebook at Lean Apps Method. You may contact me directly for any question you may have at dj.gomes@leanappsmethod.com or through my direct line 55 as the country code, 11 as the area code, and phone number is 983944133. Contact me and I'll be glad to help you out. Thanks for watching.